Well, in business, the financial crisis in Greece continues as Greeks await a Sunday deadline to come up with far-reaching reforms to be approved by European Union leaders. Well, meanwhile, China's stocks fall and rise again. So what could all this mean for African investors? For some perspectives, business reporter Alexis Christoforous sat down with Larry Seruma of Nile Capital Management.
Larry, Greece is teetering on the brink of financial collapse. China is in a bear stock market right now. Do you see these as buying opportunities for African investors, and how is this shaping your investment decisions?
We always like to invest where most people are fearful. So events in Greece have the effect of lowering the euro, and that has an impact on many African economies. So I invest in China. The stock market sell-off has an impact with regard to China-Africa trade, and that has an impact in terms of lowering stock prices for many stocks in Africa.
Do you think that China's stock market sell-off poses more of a threat to Africa than Greece does right now?
China is a larger economy than Greece, and China is a large trading partner compared to Greece. So the events in China have a meaningful impact in Africa. In addition to that, China has made a long-term commitment to invest in Africa. So as a result, China is a much more trading partner now than Greece would be, or Europe in general.
The sell-off in China has had a ripple effect through the commodities market, specifically oil and copper. Do you see these as good plays right now in this environment?
Commodities have been challenged for a very long period of time. 5 years mainly for the industrial metals. Oil and gas has pretty much collapsed over the last 1 year. What we do find is most of commodity stocks are looking cheap from a valuation standpoint. So to the extent that there's a long-term story with regard to natural resources, commodity stocks are looking very interesting at these levels.
Now, moving to Africa now, Nigeria's president has yet to make good on his promise to devalue the currency there. What does this mean for foreign investment coming into Nigeria?
Yes, so in one way, the good political transition between one government to another is a good catalyst to invest in Nigeria. But the fact that the government or Buhari has not formed a cabinet or had any meaningful policy with regard to the economy where it means devaluing the dollar, what that means is a lot of investors like us are really on hold and waiting to see what the policy is and how much they are going to devalue the naira. The naira will have to be devalued, but we're all waiting to see how much that devaluation will be.
Right. Right now, where do you see the greatest growth opportunities within Africa?
So from a growth standpoint, East Africa is interesting at these levels for a number of reasons. They tend to be oil importers, so the collapse in oil prices is a major catalyst for most of oil importing economies. But they have also had some good political transitions, so that's positive as well. Nigeria is always interesting. It's the largest economy. They've just gone through a good political transition. If Buhari delivers on the fight on corruption, if Buhari delivers on economic policy, it's really an economic engine for Africa. So it's interesting in that respect.
And what about how you consider African markets on a whole? They've for a long time been considered frontier markets. Do you think that they or some of them have graduated to emerging markets, and why? There's
a good case to really make the case that some markets are going to transition into emerging markets. Maybe not yet. The main reason has been liquidity. In most of these economies, the liquidity is much lower relative to emerging markets. But as they continue to grow and as they continue to be more transparent, yes, we are hoping to see more African markets transition to emerging markets.
And what can or should African markets be doing to attract more foreign capital?
The number one thing is transparency. They need to be more transparent. They need to be better with regulating their markets. And above all, they need to reduce the regulations with regard to taxes and with regard to allowing foreign investments into their economies. So I think those are the three key ones I would point out.
And at Nile Capital Management, what are you investing in right now?
So what we really do like is consumer-related names. So anything to do with, say, goods and services, whether it's distribution of food or going as far as farming operations, those are really interesting plays. We also like a lot of the financial services stock, mainly in the insurance sector. So, but across the board, if I would categorize, we really like consumer-related names and infrastructure-related names.
Mm-hmm. And again, for the African investor sitting back and watching what's happening on the global stage, would you say, look, don't panic, but stay on the sidelines with regards to Europe or China, or no, these are buying opportunities?
Our view is that when most investors are very fearful, that's the time for you to invest. So these are good times to invest. So where most investors are concerned about Europe, it's a time to really think about what are the opportunities in Europe, which stocks present good entry points now, and whether it regards Africa as well, most investors may be selling African stocks because of the fear in China or what's happening in Europe. Again, that's an opportunity to really think about buying in some of these names that are being sold right now.
All right. Well, Larry Seruma of Nile Capital Management, thanks so much for your insights today.
Thank you for having me, Alexis.
And I'm Alexis Christoforous, VOA News for Africa 54.